Hey guys, Joseph James here once again with another newsletter brought to you by theschooloftrade.com. Today was October 5th, 2009. Monday morning, guys, and boy, quite a quiet Monday morning this morning. Took two successful trades here in the room. Before we talk about those live trades today, I want to remind you guys of a free resource on our YouTube page. Go to /School of Trade. And guys, please, when you're there, please subscribe to our YouTube channel. That way you get all the updated videos when they come out. And please rate and comment on this video. Let's talk about some of the trade room totals we saw. Now, of course, we made a nice big fat $1,000 yesterday in 2 days. In the trade room last week. We opened the trade room back up again this week here for the second or the first full week here of October. Here opening up $160 in our pocket here this morning. So brings our monthly total here to $1,200. We'll keep you guys posted as we move through the month of October here. We're seeing better price action every single day, so things are getting further and further from the slow choppiness we saw in the summertime months. And of course, we're expecting October to be a pretty good month for us. Term of the day is price patterns or high percentage setups. Now, first of all, what is this term price pattern? What does it mean? Well, price patterns are predictable and recognizable patterns we see in price action on a chart. They can be bullish, they can be bearish. They can be continuation patterns, they can also be reversal patterns. Bottom line is these price patterns, they show us overall market sentiment. These patterns, again, they should be predictable and recognizable. They can be bullish or bearish. They can, of course, support a trend continuation or a trend reversal. And ultimately, they're going to give us overall market sentiment. Now, these price patterns, when used properly, allow us to read the minds of other traders. Even though we can't see them or communicate with them, we can actually read their minds by looking at what they were thinking and what their price action, what their votes, or what their price looked like when they traded. So based on what the traders do in the market, we can use that information in price patterns to read the minds of the traders. Now, we use price patterns for entries, for our management, and for exits. So we're always looking for these predictable and recognizable patterns that appear in price for our entry positions, to manage our trades, right, to maximize profit, minimize risk, and then, of course, to get out of trades for an early exit. We watch these price patterns most importantly around major levels of support and resistance. Now, in our trade room, we mark up these major support and resistance levels with these red lines. They're automatically drawn on our charts for us. We then wait for price patterns around those red lines. Of course, watching closely around those support and resistance levels. Now, one of the most common price patterns we're going to use are going to be swing highs and swing lows. And of course, these price patterns are very easy, very simple to use, easy to see on your charts, and that makes it all the easier, guys, to be ready, willing, and able to jump into these markets when we see a price pattern develop in your charts. Now, we use these things called price patterns to develop what we call our high percentage setups. And when you guys come out and join us in the room tomorrow morning at 2:45 Eastern Time for the Euro session or 7:30 Eastern Time for the US session, we're going to show you guys 3 of our 10 high percentage setups. All right, I'm going to give you guys these patterns free, no charge, as part of our free trial. They're the wave, the breaker, and the two-step. Now, I'm not going to go into too much detail about these here in this presentation, but we will go over these in great detail in the live trade rooms. Come out and join us. But basically, the wave and the breaker are both trend continuation patterns, and the two-step is a counter trend pattern. We take these price patterns, then we look for the best price patterns, and these, of course, are high percentage setups. Now, here's a great example of what each one of these setups look like, the wave, the breaker, and the two-step. Now, the wave pattern, again, is a trend continuation pattern. We're going to wait for price to break below that red line, that level of support in this case. Want to see my trigger line get below that red line, then we'll take a retracement off those lows to test the trigger line for a short trade. Now, of course, the long side here, exactly the opposite. Price breaks above this level of resistance. It then pulls back to test a rising, of course, has to be above that red line, a rising trigger line. We wait for a pullback, test trigger line, we get in at that pullback, and of course, that's called a wave long, right? So you get wave short and wave long. Now, here's your breaker pattern. The breaker pattern, of course, same type of principle here, but again, we're looking around this red line. We break above the red line and break above that level of resistance. And again, those major levels, those red lines are automatically drawn for me on my charts. When I see price break above that red line, I'm looking for a swing high here. Our swing indicator, of course, one of those proprietary indicators will mark up that blue line for me automatically as well. That swing indicator marks the swing high. I look for the break of that swing high for our breaker long. And of course, to the opposite side here, we get below this level of support, the red line. We then make that swing low. The swing indicator will mark that blue line for us automatically on my charts. Then I wait for a break of that swing low for our breaker short. Then, of course, last but not least, you've got your counter trend pattern here. This, again, all these high percentage patterns, these price patterns we see, again, around this major level of support and resistance. In this case, the short-term trend is down, so you've got we look for price to break below support, create a swing low, but then break back above it, make a swing high, and then, of course, going against that short-term trend down, we take a two-step to the long side. Then, last but not least, here's our two-step short, and just the flip side of that. Break above that resistance, we then create a swing high. Remember, guys, if we break above that swing high, that's our breaker long. But if we don't break above that swing high and we break below a swing low, that's our two-step short. 3 different patterns, long side, short side, and you guys can see how we use these price patterns. And again, we're going to go over these with you guys live in real time, so make sure you come out and join us in our trade room tomorrow morning. Tomorrow's a Tuesday, so don't forget, we open up at 2:45 a.m. for the European session, 7:45 a.m. all Eastern time, of course, for the U.S. session. And of course, we've also got, you don't want to forget our free webinar tomorrow at 11:30 a.m., right? Free webinars, Tuesdays and Thursdays, 11:30 a.m. Eastern Standard Time in the trade room. And guys, I want to remind you guys to pick up a copy of the beginner's course. Let's take a look at some of the trades we took today. First of the day here on the crude. Now, all the trades we took today were on crude, Euro, Russell, basically all the E-minis. The gold didn't really give us much to work with at all today. Very slow price action pretty much the entire morning. Our first trade of the day, though, here was at 10:13, 13 minutes past the hour. This is a breaker short. Now, we watched this price here broke below that 68.80 level. And, of course, we got in a couple ticks below that 81 even, right? That was our swing low. Got us in at 78 there, 68.78 here in the fill. And of course, we took our first target at 4 ticks on this one, got scratched out on our point of entry. As you can see, it came right back up against us there. So of course, once again, how we manage our trades really maximizes profit here, because we're looking to, of course, take a quick profit. But if we don't see the move continue in our direction, we don't want to let this thing run against us too far. So we move our stop up to entry and we get out of that trade early to ensure this winner never turns into a loser. So we got 8 ticks out of that market. We take 2 contracts off at our +4, and of course that was our first trade of the day here on the crude. Second trade here wasn't long thereafter, 10:46, about a half an hour later. This we had been watching as price was breaking down below the 69 even level. It came down even further below 68 half. Then it tried to get all the way down here to 68 but failed. And of course you can see here, guys, when I zoom in, 10:46 on the crude. This is a 2-step long. The short-term trend was down here at this point, and we saw this double bottom here in price as it kind of rattled off of this low of the day here at 68.14. Now, at this time, we had watched as a breaker short had just worked out to the downside. We didn't take it, obviously, because it was at the low of the day. We didn't see enough speed of the tape there. And I'm going to talk about how a breaker short, when taken at the low of the day, in our next slide. But this particular slide obviously shows this trade, 10:46 on the crude, a 2-step long, counter trend trade, guys. We saw the sellers start to lose momentum. We saw signs of exhaustion. And we then began to look for the long side, going against the short-term trend. We marked up our swing high here. Swing high was about 68.23, 68.22. We had to wait to get above that trigger line there, right? That thin yellow line, get above the trigger line. We had plenty of room there between our entry there at potential, 23, 24, and our next level of resistance overhead. So we had plenty of room there above us. Got in here long again, right just before 11 o'clock, 10:46, 68.26 with the fill. Again, another example of how we really didn't get much follow through here in the market this morning. Pretty slow price action. Got our first target, and then it came right back down in the opposite direction. So again, another kind of what I would call a small winner here, right? Hitting singles this morning. Another 4-tick winner. Took 8 ticks out of the market. And of course, that puts another 8 ticks or $80 in our pocket. So you guys can see where we got those 16 ticks and the $160 today for our total. Now I want to show you guys another example here, guys. As always, we're always looking at the pace of the tape indicator. The pace of the tape indicator, guys, is the speedometer of our time and sales window. Now, as you guys know, it can sometimes be difficult to learn how to read the tape when you're just getting started. So the pace of the tape indicator is a fantastic tool for all of our new traders to get to know how to look at price action and just how to gauge the overall speed of your time and sales window. Now, we think the speed of your time and sales window is of the utmost importance. And as you guys know, we have a rule in place when it comes to taking a short trade into a low of the day, or a high trade, or a long trade into the high of the day. We look for increasing green pace of a tape. So we have to see, in order, of course, to take a breaker short in this case, we're looking for a breaker short. We called it as high risk, and I want you guys to see exactly why this price action is moving and kind of what ties it all together here. If you notice, guys, the breaker short was happening. The entry would have put us right at the low of the day. At that time, the low of the day here was at about 68.43, 68.42. So we had the low of the day right below us, and as you guys know, we tend to be a little bit concerned about selling the low of the day, unless, of course, we see the pace of the tape indicator looking like this. Increased green pace of the tape means strong pressure now towards these lows as we approached that low of the day. That gave us a confirmation we needed, guys, to get into that breaker short. A little bit higher risk, but again, we use the green pace of tape to acknowledge the fact we've got lots of interest there to the downside as it begins to speed up as it approaches that low of the day. All right, guys, another example of how we can use that to our advantage. Now, guys, I want to do a quick recap for you guys here. Live trade room opens up at 2:45 tomorrow morning, so make sure you guys come out and join us for that. We'll give you a free 3-week trial as part of our trial, so come out and join us. No cost. We'll give you free 3 weeks. Guys, you can see the market in a completely different way, so please come out and join us. Grab a copy of the beginner's course. Always recommended for all free trial members. The beginner's course is going to be a who, what, where, when, and why about our trade room, so you guys can really learn how to trade along with us, guys, in our free trial. And guys, please remember to rate and comment on this video. Again, more information about lifetime membership.